What are some other helpful clues when we're looking for fraud in the financial statements? Audits do not find fraud. Anyone who thinks they do, thinks they're supposed to, wrong. They don't. Auditors very rarely find fraud. It's not really their fault. It's how the audit process is set up. The audit process was never designed to detect fraud, and it never will detect fraud with any regularity unless the system is changed. Multiple restatements of financial statements are a problem. If companies have to continually restate their financial statements, that's a huge red flag for me that something funky is going on in the accounting department. Companies that use cumulative adjustments instead of doing the restatements, I am wary of. So company discloses, we found some errors in prior year's financial statements, but we're not going to restate. We'll just do an adjustment now to retain earnings and call it good, because that's all we really need to do. I always have to ask myself, why are they not restating? Is there something that they're trying to bury in there? Use of non-GAAP measures is bad. GAAP, generally accepted accounting principles. GAAP exists so that when people are looking at financial statements from company to company, you know how those financial statements are prepared. You know what accounts receivable means. You know how certain reserves are supposed to be collected. You can, as an individual maybe who knows nothing about a particular company, you know how to read those financial statements. But companies are fond of using fake measures that are not in accordance with GAAP. This says the icon on the left is the cover of a book that says pay no attention. When companies are using non-GAAP measures, I always like to say pay no attention to the man behind the curtain. You know, the phrase from the Wizard of Oz. They're using these non-GAAP measures typically to direct your attention away from some really bad GAAP numbers.